Hi, I'm Howard Deal, owner of the General Agency, and today I'm here with Diane Eller. She's the owner of Benefit Riders. Diane has more than 25 years of experience in the insurance industry, and she is the former president of the Dallas Association of Health Underwriters. And today we'll be doing a short video on why should I offer benefits.
I have a lot of employers that, let's be real, they hate insurance. They wouldn't offer it if they didn't have to. So I'm going to get real here today. I have plenty of the employers that I have come face to face with that say, I hate it, don't want to deal with it, don't want to know it. That's why I hired you. They don't want to have to deal with the complexities of being a fiduciary with all of the responsibilities that come with it. So one of the things that we do is we offer a lot of tools and compliance, even payroll support. We take that off of those employers, but the reason why you do want to offer coverage is my answer. You want to attract the right employees and you want to retain talent. So that is one of the number one reasons why an employer wants to offer a group health plan, because most people work for the benefits. And when you're offering a group plan, they have access to like a PPO network, where you're only going to have access to a PPO network either in a self-employment type plan, but most of the time it's an employer plan. Howard, you know, in Texas, if you do not work for an employer and you get your benefits in the individual market, in Texas, every one of those plans are an HMO. So these employees are looking to get their coverage through an employer.
So if I'm an employer and I'm trying to keep my employees and I'm trying to keep them happy, the best way I could do that is with benefits. But when I look at the benefit bill and I'm like, oh my gosh, this is $8,000. Does this $8,000 really cost my company $8,000? Or is some of this paid by the employees? So also the other thing is too, if we can cover some voluntary benefits also. That way it makes me look good that I'm offering benefits, but I'm not paying for them as an employer. So if you can kind of go over voluntary versus involuntary.
There's three parts of that. So when you get your invoice from the carrier, unless you're just really generous and you want to pay 100% of the employee's portion, you can talk to your accountant, because that would be a full write-off for you. So you may look at it from that perspective. Or most of my employers, they share in the cost. So the employer will pay a portion, and it really depends on the size of the employer. If you have under 50 employees, you can pay a percentage. If you have 50 and above, that employee cost cannot exceed at this time 9.12%, which is set underneath ACA for affordability. One of the advantages is, Howard, is when that employer is making an offer and the employee's paying their portion, normally they've got the help of the employer contribution. They're not having to make that one lump payment. It's going to be divided out by their pay period. So depending if you get paid once a month, twice a month, or every other week, or weekly, your portion's going to be in increments. And the third thing is, most of the time, hopefully they have a Section 125 where their portion is withheld tax-free, so it's saving the employer that employment tax and the employee from having to pay tax like Social Security and Medicare. So they go home with more money.
Okay, so if I'm an employer, like I mentioned before, and let's say I have an $8,000 bill sitting there, hypothetically, they're all employee onlys. Nobody has any dependents covered on there. And if I'm an employer and I'm saying, well, I'm going to pay 50% of that $8,000, okay? The employee's going to pay the other 50%. So really, as far as my business is concerned, I'm only coming out of pocket $4,000. But I get the write-off on that $4,000, and I don't have to match the payroll taxes, the FICA, Medicare, and SUTA on those, on that money either. So my $4,000 may only be $3,200.
Correct.
Is that right? But even though the bill is $8,000, I'm only paying like $3,200, and the employees are paying the rest,
And
right?
yes.
And the employees can pre-tax that benefit as well, correct?
Yes, correct.
And then that way, when they're paying their portion, they won't have to pay. They won't see the taxes taken out, or they'll have that pre-taxed.
Right, because their portion is taken right off the top, and then whatever the remainder is what the employer is going to tax. So they go home with more money.
Yeah. So if I'm that same employer, and that's just on the health, let's say that I want to do some voluntary benefits, which I want to do some life, dental, vision, accidents, different type of voluntary benefits. As an employer, I don't pay that, correct? If it's voluntary.
Right, we can
Okay.
set that up two ways.
So let's say that I do that voluntary. I'm offering a whole slew of products, a whole slew of benefits, and I'm still out of pocket only my $3,200 hypothetically. But it looks like I have a great benefit package. Actually, I do have a great benefit package. But on the flip side of that, if the employees are paying for all of that all the voluntary benefits out of there, I'm still not matching the FICA, Medicare, and SUTA taxes on all the voluntary benefits. So my $3,200 may have dropped down to what, 28, 29. So my benefits are actually reduced for offering that, correct?
That is correct. And the type of benefits that we do put in place for a lot of our employers are very, I call rich benefits. And rich as in not money, but rich as in more and better coverage. So the employer's got a group plan, and then we'll come along and we'll put in other benefits that enhance their group package, so that employee, when they get to the enrollment, they're delighted because they're going to have the option to either enroll or waive coverage, but it gives them a lot more choice, and we make it very affordable again because it's broke out by pay period.
Okay. And one other thing, too, when we were talking about compliance, and this is something also that the compliance book that I have actually run into a number of times. When they say, when you get this book from Diane, it says fiduciary right on the top. Just keep in mind when we say the good, bad, and the ugly, if an employer is taking money out of an employee's check and then the employer doesn't pay the premium, that's a fiduciary problem. So make sure when you're doing these things that you talk to Diane, make sure that you stay out of all kinds of trouble. So with that being said, offering benefits is a great way to attract and retain employees, but you do have to have an experienced broker, and if anything ever goes wrong, you pick up the phone, you call Diane, and let her team fix it for you, or point you the right direction and guide you through the process. So it's very important that you have an experienced broker, and so remember to call Benefit Writers whenever you're in the market for benefits and need some help.
You can reach us too at area code 214-771-3011. And if you want to speak with me directly, I'm in extension 402, or you're happy to go through the menu and select the agent that you prefer to work with. So I'm very happy to be here today, Howard. And I'm glad you talked about the voluntary type benefits. Definitely enhances the employer package where it's not coming out of the employer's pocket.
Okay, with that being said, remember, if you like this video, to hit the like button and subscribe to the channel because there'll be more videos to come.
Yes.
And have a great day.
Thank you.